What do I think right now? I liked it last December. I still think I mean...
Would you buy more right now?
Would I buy more? I would probably... I'm kind of...
Paul Tudor Jones is an American hedge fund manager, billionaire, and in 2020 and 2021, Paul Tudor Jones came out and said, I'm investing in Bitcoin. Bitcoin is the fastest horse in the race.
Bitcoin has this enormous contingent of really, really smart and sophisticated people who believe in it. And now when I think of the menu of the inflation hedges, the thing that Bitcoin has, again, it's like investing with Steve Jobs and Apple or investing in Google early. You've got this group that's, by the way, crowdsourced all over the world that are dedicated to seeing Bitcoin succeed in it becoming a commonplace store of value and transactional to boot.
Paul Tudor Jones seems to be changing his tune on Bitcoin, saying Bitcoin has a real problem. Lower inflation is going to be a headwind. Bitcoin has become less attractive thanks to what's become an unfriendly regulatory picture in the US, and what he expects will be lower inflation going forward. Quote, Bitcoin has a real problem because in the United States, you have the entire regulatory apparatus against it. Jones, who previously lauded Bitcoin's appeal as an inflationary hedge, added that he believes inflation will continue to come down, adding that this would be a less bullish scenario.
Bitcoin. You came on our air during the early part of the pandemic. I think it was trading at $8,000-$9,000 a coin. And you said, I'm in. And I think you wrote it all the way up to $60,000. And we then wrote it back down to $15,000, and we're now sitting, I think, somewhere around $27,000.
I've never sat on a horse that long, just so you know.
So what's the... You're still on the horse, though.
From the beginning, I've always said I want to have a small allocation to it because it's a great tail event. It's the only thing that humans can't adjust the supply in. So I'm sticking with it. I'm going to always stick with it as just a small diversification in my portfolio. What do I think right now? I liked it last December. I still think I mean...
Would you buy more right now?
Would I buy more? I would probably... I look at it in gold, and I think they've done so well recently because of the fact that we have had these great risk premiums. I wonder whether they may not be boring in the future. Also, Bitcoin has a real problem because in the United States you have the entire regulatory apparatus against it. So it's just kind of yesterday's news. And if inflation's truly done a bit, if that story's been played, then you have to wonder. We were buying gold and Bitcoin for the inflation hedges. That game may be over. I would, in 6 months ago, before AI, before the possible productivity boost that we'll get for it, I would have said a completely different story with regard to the inflationary future and with regard to all the inflation hedges.
So Paul Tudor Jones is sticking with Bitcoin for now. I like that. But it seems like his interest or enthusiasm or just his investor's thesis on the asset is waning just a little bit. Why? Because legendary investor Paul Tudor Jones is predicting that the Federal Reserve will not raise interest rates any further this year, putting markets higher by end of year. He says that declining consumer price index CPI data, which measures the changes in the price of goods and services, and a looming recession will cause the Fed to keep interest rates at their current level. I think that they are done hiking. Definitely. I think they're done. I think they could probably declare victory now.
I think they're done.
You think they are done?
Oh, definitely, I think they're done. I mean, they could probably declare victory now, because if you look at CPI, it's been declining 12 straight months. 12 straight months. That's never happened before in history. So there's a strong downward arc to inflation at the moment. 2-year break-evens are under 2%. You can see that inflation, to a great extent, has been wrung out of the market. Now, does that mean that we're getting ready to imminently cut? No. But you got to think of interest rates a bit like chemo. So chemotherapy, chemo is poison. Interest rates with the kind of amount of sector-wide debt that we have between private consumer and the government, we're probably at levels where we've typically hit a recession in the past because of the interest tax on the economy. So we're at a level that historically has really slowed the economy and historically has kicked off a recession. I think it's just a question of waiting for that tax on the economy to work its way through.
Mistake then for them to raise interest rates?
Would have been a jump ball for me. I would have been 50-50 on the last one. I could have been talked out of it. I would have been reluctant to do it. The only reason why I probably would maybe have gone along with it is because I think equity prices are going to they're going to continue to go up this year, and the financial cycle drives so much of the business cycle. Okay. So,
but let me just pick up on what you just said. You said you think equity prices are going to go up this year.
Oh, yeah.
So you think they're going to end higher than where we are right now?
Oh, yeah.
Now, institutional investors, big whales of investors, are selling. The latest CoinShare report finds larger digital asset funds are shedding investors. Bitcoin funds take a hit as investors' confidence wanes. Money is being pulled out of big crypto funds as investor sentiment seemingly shifts and the digital asset market as a whole dips. Last week, investors withdrew over $54 million from large digital asset funds for the fourth consecutive week, digital asset firm CoinShare said in a Monday report. The cash flowed out from large funds designed for accredited investors like Grayscale, 3iQ, and 21 Shares. So institutions are getting out of Bitcoin. This is alarming. It's interesting, according to the report, some cash was pumped into altcoins, the firm added. Inflows were seen across 8 different altcoin assets, suggesting investors are becoming more adventurous. Monday's report noted the altcoins included Cardano, Tron, and Sandbox, to name 3 out of the 8. In addition, a wallet that could belong to Satoshi, at the very least somebody who's around a long time ago. Ancient Bitcoin changes wallets after 12 years dormant. So far this year, over 3,000 Bitcoin from ancient supply has returned to life. Asleep for ages, more sats wake from years of slumber. Bitcoin bought back in 2011 came back to life on Thursday when 139 Bitcoin belonged to address 1H, moved into a newly created SegWit address. The owner, who hodled for nearly 12 years, bought the coins in June 2011 for a bit over $2,250, only to see them grow into a staggering $3.5 million at Bitcoin's current price mark. These coins belonged to what's known as ancient supply, which refers to Bitcoin purchased at least 7 years ago, although some analysts use 5 years for that metric. It's hard to tell whether these owners' convictions have changed and whether these movements are related to selling of the coins or simply personal custodial practice. What do you think? It's possible that they could sell. So we don't know exactly what they're doing, and surely they're free to do whatever they like. Hey, props to you for hodling for so long. Do you think after 12 years of holding, they could sell a little bit? I would think so. Eventually. Anyways, despite Paul Tudor Jones, despite these institutional investors going from Bitcoin into altcoins, I am incredibly bullish on this space. These are bottom signals, my friends. I think we're in crypto spring. I don't expect much as far as price appreciation to happen this year, but getting into 2024, as time passes, the market turns, the halving comes up, the presidential elections, I am bullish. Subscribe to the channel because we're going to continue to keep you updated on all of this.